Good evening, everyone, and welcome to this evening's webinar on the process and considerations for Americans purchasing real estate in Spain. We're joined tonight by a panel of experts on various aspects of the real estate purchase process in Spain. And briefly to introduce our panel. To begin with is Agnes Chomos, a buyer's agent based in Madrid from Help to Buy Madrid, helptobuymadrid.com. And Agnes has been working as a buyer's agent in Madrid for over 6 years, and she has helped hundreds of Americans find their ideal property in Spain. She'll be followed by Michael Hart. Michael has been supporting expats for their international currency needs since 2009. He's currently overseas relationships at Spartan FX that helps individuals move funds between countries with favorable exchange rates. Following Michael, Anna Kletsova is founder and managing partner at Cleven Vera International Law Firm. Cleven Vera specializes in attending to the legal needs of international clients in Spain with a multilingual team of lawyers and paralegals, and in particular focus on the Golden Visa, which there are changes coming to that Anna will tell us more about. Alejandra Pastor is the founder of LTF Advisors and specializes in assisting expats with their Spanish tax compliance. Alejandra has been working with Americans moving to or living in Spain for over 20 years. Thomas Sneed is the founder of Wicklow Expat Tax Advisors, which assists Americans living abroad with their US taxes. Thomas holds both CPA and CFA accreditations and has over 10 years experience working with Americans in Spain and helping them keep compliant with their US taxes. Shane Clark is president and co-founder of Euro-American Financial Advisors. He specializes in financial advice and investment management for Americans living in Spain. David Infantes is Madrid Welcome Hub manager, which is a Banco Sabadell branch dedicated solely and exclusively to international clients in Madrid. David will be talking about banking when buying real estate in Madrid, including mortgage finance. So, a good schedule. All of our panelists will be doing brief presentations, and we'll follow that with a Q&A session, so you can put your questions to the experts. And without further ado, I would like to hand over to Agnes Chomos.
Good evening or good morning, depending on when you're seeing this, everybody. Thank you, Ugo, for the introduction. Let me quickly share my screen. There it is. Okay. Is that working? Am I sharing? Okay, wonderful. So, like Ugo said, I'll be very quickly just breezing through the process of purchasing property in Spain. But before I even jump into the steps, one thing that I'd like to mention is that real estate purchasing processes and things like taxes can vary a lot from region to region in Spain. So this applies to many things in Spain, that it's very region dependent. So don't be surprised if you, or bear this in mind when you're getting advice from someone who's not local to where you're actually buying. So having said this, the first step in determining, in purchasing property in Spain would be determining the where, the what, and for how much. Now, the where and the what is kind of personal. You have to look at the areas that fit your lifestyle and see what kind of properties are available. But the for how much is something that it's worth getting very much in detail into. And by this, I mean finding out what your exact budget is. It's easy to forget, even if you're a cash buyer, it's easy to forget that there are closing costs on top of the purchasing price. And these closing costs can include, or do include actually, taxes, which again can vary. The amount of the taxes can vary from region to region, and things like notary fees, registry fees, maybe your buyer's agent or other agency fees that you need to pay. So make sure that you have the funds for that as well. And if you are buying with a mortgage, then it's especially important that even before you start looking at properties, you talk to your banker, make sure that you are eligible for a mortgage from a Spanish bank, how much down payment you will need to have, and even what conditions or approximate conditions you might be able to get for a mortgage. So this will help you, determine your final budget and make sure that you are actually looking at properties that you will be able to buy later on. The second step, getting your NIE number and opening a bank account at a Spanish bank. This step is technically not necessary to complete it until you're actually ready to go to the notary and sign the deeds for the property that you're going to buy. But I put it right up here in the beginning of the process because it can be more time consuming than you'd expect. So it's good to start with this early. Once you have a bank account in Spain open and you've transferred your funds to it, then you will be more prepared, better prepared to react quickly and to be able to confidently make an offer on a property when you do find it. The next step is viewing properties. This one requires no explanation. I think it's what we all like to do is to actually look at properties to see them and to see if we like them. Then once you find a property that you like and you'd like to make an offer on, then we go into the next step, which is making an offer, conducting the due diligence, and paying a small reservation deposit. Now, I put these three things in the same step because sometimes the order can be reversed. And by this I mean is that if the property that you're buying is sold through an agency, this agency might actually ask you to put some money down just to be able to make an offer to the seller. They do this because they want you to show seriousness in your intention if they're going to negotiate the price on your behalf. It's not ideal for the buyer because you're putting money down before you're able to conduct a full due diligence, but don't be surprised if you're asked to do this. This small reservation deposit can typically be anything from a couple €1,000 to, well, maybe between a 1% and a 3% of the purchase price. So I'm not talking about the arras contract, which is the next step, step number 5, is negotiating and signing the private purchase arras contract, which is when you pay the 10% of the purchase price. Now, this private purchase contract is actually one of the most crucial steps and one of the most important steps in the purchasing process, because this is where you negotiate everything. You have to try to include in this contract not only the purchase price, but also things like the dates. So how long will you have between signing this contract and actually going to the notary to sign the deeds, and the means of payment, how you're going to pay for it, and also other details, or at least I recommend that you include other details, such as will you get the property with the furnitures or without the furnitures, these kind of things. Whatever you don't negotiate here, it's going to be much more difficult to negotiate later on. So take your time and get advice on the clauses to include in this contract. Also, the reason why it's called an arras contract, which is a very specific name for a private purchase contract, is because it's actually regulated by law. There is always a clause included in these contracts that state that it's a type of purchase contract that allows both parties to withdraw from it or to rescind the contract. But the penalty for rescinding would be the 10% that you have paid if you withdraw and decide not to buy the property after you've signed it. Or for the seller, it's the same amount. So the seller would have to give you back twice the amount that they received from you if for whatever reason they decide not to sell to you after you've signed this contract. So that's why it receives this special name of arras contract. Once you have signed this contract, you've paid the 10%, all that's left for you to do is to finalize your mortgage procedures if you're buying with a mortgage, or if you haven't already, this is the time when you really need to transfer your funds to your Spanish bank account and get everything ready to be able to pay the remainder of the purchase price and sign the deed. Once both sides are ready, both buyer and seller are ready to buy and sell, then you agree on a date and time to go to the notary, to a public notary's office, where everybody will be there, you, seller and or their agent, and you will sign the purchase deeds and pay the remaining 90% of the purchase price and receive the keys to your properties From that moment on, you are fully and officially the owner of the property. However, don't forget the last step, which is inscribing this purchase into the property registry, and of course paying your taxes and doing the post-purchase paperwork. This is something that typically either the notaries or the bank's administrative agency will do for you, or your lawyer, but still it's important to make sure that it's getting done. And that's basically the basic steps. Again, there can be variations to this, so this is just a general overview. And that's it on my side. Handing the word back to Ugo. Thank you for your attention.
Good evening, guys. Yeah, my name's Michael. I work at Spartan FX, and yeah, we help individuals move their funds between currencies as and when they're migrating from one country to another. And you know, in recent times, we've been very much specializing in the US to Spanish market. When you're just moving a small amount or just going on a vacation, it doesn't matter so much about the exchange rate that you convert your funds at. But if you're buying a property in another country, you're generally moving across quite a sizable amount. So it's our job to ensure that you're converting those funds at the best exchange rate possible. There's two key areas that we help with. The first side of it is more the compliance side of things, and the sort of the logistics of moving your money across. When you start moving amounts or larger sums across, then generally you might need to prove your source of funds. So you need to prove where these funds have come from, and then also the reason for the transfer. So essentially, we collect all the compliance documentation that's required so that we ensure that a transfer goes through as smoothly as possible and doesn't get held up for anti-money laundering purposes. So, you know, if you're purchasing a property, the last thing you want is your funds to be held up, and then all of a sudden you can't get it, funds to the seller or into your Spanish bank account. So we help you navigate through that side of things. We help you set up a way of getting your dollars out of the US, because again, often clients have already moved to Spain, and it's not so easy just to log on and move across $500,000 from one account. So we help you navigate through that process as well. When you're buying a property, as Agnes sort of alludes to, that 10% deposit normally goes directly to the seller. We're able to make that transfer directly to the seller through ourselves, and then when it comes to actually the balance, that's then usually done through to the bank, and the bank is drafted from there, basically. So that's kind of like the compliance side of things, just compliance, helping you set up transfers and making sure everything runs smoothly. We're also here to try and ensure that you get the best rate possible, because on these larger sums, a very small difference in the exchange rate can make a massive difference to how much a property is going to cost you. So we have a few tools in place where, for example, you can place an order to target a specific rate. So we can give you some guidance on targeting certain exchange rates. If, for example, euro dollar gets back down to 105, you could have a trigger in place, for example, to automatically convert funds at that level. And then we also have sort of other products which is called a forward contract, where, say, for example, your US house sale hasn't gone on the market yet, but you know that you want to use the equity from that property. You can say, well, actually, I'll fix in the current exchange rate on the full amount with a 5 to 10% deposit, and then you can pay for that up to a year in the future, say once your US property's sold. So it just means that you can start looking at exchange rates and moving your funds across before you've actually, say, sold a property or unlocked investments in the US. So it just gives you a bit more time to work with and try and target better exchange rates and essentially get the most amount of euros for your dollars. So yeah, that's just a broad sort of idea of what we do. So I've been doing this for 15 years now and help quite a few thousands of clients move funds across. So we're here to help with that and answer any questions you have. So yeah, that's all from me for now.
Thanks very much, Michael. Anna, I think you're up. So let me just. Maybe I should be able to unmute.
I think you need to unmute, Anna.
I think she should be able to unmute now.
Do you hear me now?
Yes.
Okay, perfect. And do you see my screen well?
Yes.
Yeah, perfect. Hi, everyone. My turn is to speak briefly about immigration and the golden visa. No? So those of you who've been following up the Spanish news have probably heard about this a lot in the last couple of weeks. So far, the main points to mention is that for now, as of today, the program is still in force as it was from the beginning. No? So nothing has changed as of now. We'll speak about it a bit later. And also that the golden visa is not the only permit available for you to reside in Spain if you wish to do so. But it is a very attractive permit that has many advantages. No? So what is it all about? Basically, it allows foreign investors to obtain a residence and work permit under special conditions. And if we are talking about the real estate investment, the investment that qualifies is the one that you see on the screen. No, it has to be a minimum of net investment of 500,000 in any real estate. It can be commercial, residential, rural, parking slots, anything that is called real estate. No, that's related to land. It can be one property or several located in one region or all over Spain, any part of continental Spain or islands, and the mortgage is possible, but only on the above amount of on top of that minimum investment. And taxes and all fees are not included in that. So all the closing costs have to be paid apart. And this permit covers the main applicant, that is the owner of the property, and all the family members, like the first and direct family members. Now, it can be a spouse or a partner, including same sex, underage children, and any family members who are financially dependent on you as the main applicant and living together in the country of origin. The advantages, the permits are issued for 3 years and you can renew it for 5 years as of now, as long as you keep the investment. So it doesn't require you to live in Spain in order to renew it, but it allows you to live and work in Spain as employed or self-employed without basically any restriction. You know, that's one of the main advantages that it has. And you can travel with it anywhere in the Schengen area without complying with that short visa-free stay of 90 days every 6 months. You would be exempt of that rule. And if you choose to live in Spain, mostly during those 5 years, you can qualify for a permanent residency if you actually live in Spain for 5 years. And for the citizenship, if you live in Spain for 10 years. And meanwhile, when you have that real estate purchased, you can rent it or you can use it for yourself, or you can just have it empty at your disposal wherever you need it. You know, there is no obligation on how you actually, what do you do with that, you know, how you handle it. The application process, it depends on what way you choose to go. Now, you can apply for a visa, for an investor's visa through one of the Spanish consulates in the country of your residence, or you can arrive in Spain and you can apply directly for a residence permit. So if you choose to apply for a visa, they are issued, they are like stickers in the passport that they put in the consulate in your travel document, and it's valid for a maximum of 1 year. But if you apply from Spain, then it is issued in the form of a residence permit and it's valid for 3 years. And the processing times in these permits are very fast as well compared to any other permits, like most of the other regular permits. It's 10 working days for a visa and 20 working days for a residence permit. Here you have a map of the US to see where your nearest consulate is, no? And on the website of the Spanish embassy, you could see which consulate you would need to go depending on where you live in the US. And it's only possible to apply to the consulate which belongs to your place of residence. Now, what is going to happen with the golden visa in Spain? No, for now, what we have is only the announcement that the President Pedro Sanchez made on the 8th of April that Spain will end the golden visa program for real estate investment. And basically, the objective of this change is to make sure that there is more available property for residential rentals, for locals or for anybody who needs it as a main dwelling. However, it created a lot of controversy and discussions in the recent weeks, especially, like all sorts of political debates, that in fact the impact that this type of real estate purchases has in the total of Spanish market is quite limited, so you could see that there is only 0.1% of all the real estate purchases of the total market were, on the account of golden visa during the total validity of this program, which is since 2013, up until the information that was available 2022. And there are some countries in the European Union that they still have those programs, like those ones that you see, and some of them that they recently chose to end that program, like Portugal or Ireland. So now that it's possible that Spain will end that program, but just we now don't yet know how it is going to happen or when it is going to happen. And so far, as of now, there was not any bill or any draft or any project to cancel this program was published so far. No? So as of now, it is in force. However, it is possible that at some point it will be ended because there is a urge from the European Union in general to end that program for real estate investment, and make it more, creative in terms of more of like creating workspaces and businesses, etc., etc. So, yeah, just a conclusion. It's still working, but we don't know for how much. No, and the last slide is just so you see what scape we are talking about here. No, so there would be very few permits issued normally during the first years when the program was in force. And in 2022 and 23, you see a very significant increase of them. And mainly it is due to the fact that in this 2022-23, you see many British applicants that before they didn't need any residence permit as they were part of the European Union. But in Spain, historically, many British citizens, they own real estate. And of course, it is a very convenient option for them to be able to live in Spain, however, not obliged to live in Spain in order to renew it. So in part, that's because of that, but it's also because this program is in fact quite, convenient and gives many advantages. So that's all from my side, and feel free to ask any questions. And stop share.
Thank you very much. So we'll hand over to Alejandra. And just before we do, just to the audience, do drop any questions in the chat as and when you think of them.
Hello, good afternoon. Can you... Okay. You can see my slides, right?
Yes.
Yes. Okay.
Yes.
Okay. Tax considerations when buying real estate in Spain. As a way of introduction and in line with what Agnes was saying, the taxes related to buying real estate in Spain or owning real estate in Spain are different based on the autonomous community, on the comunidad autónoma where you live or where the real estate is located, okay? So, for example, Madrid is a comunidad with low taxes or not as high as Catalonia or Valencia. So in case that you are planning to buy real estate as an investment, not your habitual house where, I mean, you have to buy your habitual house where you live, but as an investment, bear in mind these differences, okay? That taxes are not the same depending on each comunidad. When buying real estate, the taxes applicable are going to depend on where you are buying new construction or not. For new real estate, tax applicable is VAT, flat tax rate of 10%, and the AJD, which is Actos Jurídicos Documentados, which varies depending on the comunidad autónoma where the property is located, between 0.5 and 1.5, okay? If you're not buying new construction, then tax applicable transfer tax. Here you can find between 6 and 10%. Catalonia and Valencia 10%, Andalucía 7%, Madrid 6%. Okay, so I mean there's a quite difference between Madrid and Catalonia. Okay, for 4 points. There are some reduced taxes depending on if you buy VPO, large families, and well some reduced taxes. It is very important. You have to consider what's the value of the house, okay? The tax of the real estate, sorry. The tax administration doesn't want that you pay taxes on an amount that is not the real market value of the house, okay? So what they want is you have to pay taxes on what they consider the fair market value. For these purposes, since 2022, there's a new reference, okay, and a new reference value, which is the valor de referencia catastral, which is public. You can find that in the web page of the catastro. So you have to pay taxes at least for the value given by this reference, okay? This is very important because in case you don't do this, I mean, in case you paid for a lower value, not for a higher value, you can find, I mean, you will probably 99% have a tax audit and probably penalties for not paying on these values, okay? So this is very important. You have to take this into account. Then there is the EV, which is a local annual tax. It's a municipal tax based on the cadastral value, and I mean, and that's it. Okay. Once you own the house, in order to establish what taxes you are obliged, it depends on whether you are a Spanish tax resident or non-Spanish tax resident. As you all probably know, you are a Spanish tax resident if you are in Spain more than 183 days, or you have in Spain the center of your economic interest. If you fulfill any of those, you are taxed for your worldwide income. Okay, so for real estate purposes, it will be taxed in the personal income tax depending on the use you give to the real estate. If it's your main house, your habitual house, there's no tax, okay? No deductions. Also, there used to be a deduction if you bought through mortgage, but it's not applicable anymore. So no taxation. If the real estate is rented, you have to declare the rental income. The rental income is taxed on the general taxable base at the progressive tax rate, as the same if it was employment income. Okay, the profit is calculated on income minus expenses. You can deduct all the expenses that are directly related to the rental income, interest of the mortgage, insurance, repairs, supplies, if you need to buy any furniture. It is very important that you keep the proof and you keep the invoices of any expense that you deduct, okay? Because in case you have a tax audit, the Spanish tax administration is going to ask you for the formal invoice of any expense that you are deducting, okay? It is not enough that you prove that you have paid the expense and you have a ticket or some kind of document, okay? You really need the invoice. This is very important because otherwise they are not going to accept the deduction of the expenses. And also you can deduct the depreciation. In Spain, it's 3% of the value of the construction. For 2023, which you know that the taxes are declared now.
I think Alejandra's internet may have dropped out. So we'll just see if she rejoins. Otherwise, we'll have to pick up where she left off after another presentation. So, Tom, would you like to do yours? Because I think Alejandra may have an issue with her internet.
Should I just go ahead or?
Yeah.
Let me know. Okay.
Yeah.
Hi, everyone. Thanks for coming. I told Hugo this was going to be super brief. It's going to be a little less brief because a few things popped in my head while I was watching everyone. And I'm looking at the camera, right? I have my notes. So considerations for Americans. So I'm a U.S. tax person. I handle taxes for U.S. expats. So I'll focus anyone in the audience that's American. This pertains to you, and everyone else can mute me. So one of the things I looked at as I was listening to this is if you're American, if you're buying it as a rental, and Alejandra is going to explain what the taxes in Spain are for people that are not resident in Spain, because it's a different treatment than people that are resident. But as an American, you're subject to the tax worldwide income, no matter where you live. So anyway, you will have to declare the rental on your U.S. tax return. Your expenses are, there's some expenses you can probably, you might run parallel books because some expenses you could take in the U.S. Depreciation is calculated differently, usually more in the taxpayer's favor than in Spain. You declare it on your U.S. tax return, but under the treaty, Spain, because it's a property in Spain, they get first shot at taxing that. So you'll pay tax in Spain and you'll take a credit in the US if it's a rental. Another thing that I was thinking about when I saw Alejandra speaking was a capital gains tax. You're subject to the capital gains tax when you sell the property in Spain. If you live in it, in the US, we have a rule where if you live in it 2 out of the last 5 years, you get a $250,000 exemption, capital gains tax exemption. So the likelihood that you're going to owe any U.S. tax on even if it's a rental is unlikely. You do have to declare it, but you'll pay Spanish tax first. And Spanish long-term capital gains tax are generally higher than the U.S. So that won't be an issue. One thing that I wanted to mention, and Alejandra can probably comment on this, is that if you're moving from the U.S. and you're selling your house in the year that you're moving, a good thought would be to not move to Spain until after sort of July 2nd, 3rd, because if you don't spend 183 days in Spain, you are not a resident. And Spain won't give you that $250,000 exemption. So, and they'll want to tax you on it. If you move to Spain on June 25th, for example, you're a tax resident that year. And if you sold a property in the US, they're going to want to tax it. So that sort of just play on the timing can be important. And there are some other Spanish tax things to take into consideration, like if you buy another house, you might not be subject to Spanish tax, but that's Alejandra's department. There's just two other things I want to mention. As an American citizen, as a taxpayer, you have to declare your foreign assets. If they go over $10,000 on the FBAR, then there's higher thresholds for the 8938. The house, if you buy a house, a property or any kind of property, it does not have to go on either of those forms. But if the money goes into your account for a day or for minutes, if it hits your account before it goes out to the seller, it has to go on those forms. So that's something to keep in mind. It does go on the form because it's your max amount. So a lot of times clients will get a big mortgage, goes into their account, comes out the next day. It still has to go on the FBAR. The last thing I just want to mention is if you itemize deductions, and you're living in the US, you itemize deductions, you cannot deduct foreign real estate taxes anymore, but you can deduct interest. So if it's your second home, there's some rules around that. But if this is a second home, you are allowed to deduct mortgage interest. And I think that's all I have to say. If anyone has any questions, just please let me know.
Thanks, Tom. I think Alejandra's back with us, and would you like to continue where you left off?
I'm sorry, I don't know what happened. So sorry for that. Okay, so well, yeah, I was just explaining what was the rental income. I think we finished with that. So another thing is what happens if your real estate is not your habitual house and it's not rented, even though you have to declare an income in your personal income tax. This is calculated on 1.1% of the cadastral value, or 2% if the cadastral value is not reviewed. Okay, another tax that applies when having real estate in Spain is the wealth tax. Wealth tax is completely managed by the autonomous communities, okay, by each comunidad autónoma. So there are some general limits, and then there are some specific limits applicable to each one. The general limits to declare are: if you have more than 700,000 euros in a taxable base, which is basically your assets minus your debts, okay? Or if you have more than 1 million euros of the total value of assets, here you don't include the debts, that's the general limit to declare, okay? There is also an exemption of 300,000 euros that applies to the habitual home, but it has to be a habitual home. It's not on rental. It's not a house that is rented or that it's your second residency or whatever. For Catalonia, for example, and for Valencia, the limit is 500,000 euros. Okay, so it's lower. There used to be some comunidades autónomas where the wealth tax was completely exempt. Mainly it was Madrid, Extremadura, Andalucía, and Cantabria. Okay, in these ones there was no wealth tax applicable. So last year the government introduced a new tax, which is the other one that is in the slide, which is called the solidarity tax. It's same rules of the wealth tax, exactly the same, but with a limit of assets above 3 million euros. it was a political issue. The government what wanted is that this was paid on those comunidades autónomas where wealth tax wasn't applicable. Okay, so basically for 2023, all these comunidades have changed the rules. And for example, in Madrid now, if you have assets above this limit, you will pay wealth tax. So the tax goes to the comunidad and not to the state. Okay, so more or less, you have to check the limits in each of the comunidad autónoma where you live. But if you have assets above these limits, you will be obliged to declare. For non-residents, in line of what was Thomas saying, well, first, what Thomas was saying, I mean, if you are a non-tax resident in Spain, if you are not here more than 183 days. So the year that you're moving or the year that you are living, you can use it to do some tax planning and see where, if you are selling some property or selling some shares or selling whatever, where it's better to pay in Spain or in the US or where the country where you are coming. Okay, so maybe you can move the day so you are not in Spain more than half of the year. Okay, so basically, if you are a non-Spanish tax resident, you are only taxed in Spain for Spanish source income. Okay, so if you own real estate in Spain, and this is rented, you will have to declare the rental income. For non-UE residents, it's pretty high because you have to declare 24% flat tax rate on the income with no deduction of expenses. Okay, so if you are a US tax resident, you have to pay on this amount. If you are a UE resident, you can deduct the expenses and apply a 19%. So it's a big difference. If the property is not rented, same rules that for residents, taxable base 1.1% on the cadastral value and tax rate at 24%. Wealth tax and solidarity tax applies the same as we have explained, with the only difference that it only applies to assets in Spain. But if you buy a property in Valencia for 700,000 euros, you will have to declare wealth tax in Spain, even you are a non-tax resident. Okay, so you have to bear this in mind. And that's it. I'm done. Sorry for the disconnection earlier.
Thank you very much, Alejandro. So now let's hand over to Shane Clark from Euro American Financial Advisors.
There we go. Can everybody hear me? I'm unmuted. So a little bit of background on myself and our firm. My name is Shane Clark. Our firm is Euro American Financial Advisors. We are headquartered in sunny Sevilla, and we are licensed with the Spanish investment authorities to provide investment advice and financial planning services. My business partner and I started this firm around 3 years ago. And we also have a sister firm in the US, International Asset Management, which has been around for 22 plus years. So we've seen a lot of different situations over the years. And tonight I'm going to be speaking a little bit about, real estate's an asset. So how that asset fits in with your overall investment portfolio. So without further ado, so we essentially provide two different services. We provide cross-border investment advice, and the two elements to that are investment advice and financial planning. The investment advice side is looking at how can we structure your investment portfolio to optimize all of your taxes you're going to pay here in Spain and potentially the US, wealth tax, capital gains, taxes on dividends, income, and then how can we maximize the return of those investments given your level of risk. So what we do is we coordinate with your team, people like everyone else who's spoken on this panel, to work with them to make sure that everybody's in the loop, everybody's informed on your US tax side, your Spanish tax side, everything goes smoothly, and hopefully you don't have any surprises. And I'm saying we also have some pretty beneficial knowledge, things like what Thomas Snead said about your property tax on your house in the US, selling it before you become a tax resident in Spain, that could potentially save you tens or hundreds of thousands of dollars. So it's important to know these things before they become a problem. And that's something that we specialize in. The next one is financial planning. So financial planning, and this really plays into a real estate investment because, as I said, a real estate investment is like any other investment, but there's sometimes some emotional, ties to that versus your S&P 500 ETF. So we need to treat it that way. We need to be objective, and we need to see how it fits into your overall investment portfolio. So what we do with a financial plan is there's kind of two sides to it, a number side and a non-number side. On the Excel side, let's say, we create 3 financial statements. So a personal income statement, statement of cash flow, and a balance sheet. So essentially we look at where you're at today, what your liquidity situation looks like with cash flow, and then how much money you're spending. Maybe if you're a new expat versus how much you were spending in the US, this could be a big change for you potentially when you take that into account. And then we project everything into the future, 20, 30 years through the end of your life. We can look at how you feel about your investment portfolio today, how your expenses are matching up to your income, make changes if we need to, and then have some hypothetical scenarios in there. Okay, what if I want to buy a property versus renting a property? What if I want to fund my grandkids' education? We can incorporate different goals and different life events. Maybe you have an inheritance coming at some point, and all of it can go in the plan to help us have a better picture of where you're at today, where you're going to be at in the future. And then really that informs us on how we invest your accounts. Do we need to create more income? Do we need to be more aggressive, more conservative? All of it helps with peace of mind, but also on the investment side. This is something I won't dwell on too much, but people often ask during our kind of initial consultations, is there anything I'm forgetting or that I should know about? And the answer is yes. This is kind of an expat checklist we go through. Anything related to becoming an expat before you move, issues following the move, kind of just after, within the first 6 months, and then ongoing issues. So there's lots of things: learning the language, filing US and local taxes, real estate questions, visa issues, all of these things we kind of go through to make sure that you're clear on what your obligations are, or if you need to speak to a professional in a related field, such as tax or legal or insurance. So we just make sure everybody feels comfortable and knows what's going on with their situation as it changes. This one as well, I'll send it around afterwards. It's kind of a brief overview of how we got here as an American in terms of the complications of being an expat. So the real big piece there is the citizenship-based taxation. The US is kind of one of 2 countries that does that, which means you have to file a tax return every year, regardless of where if you don't live in the US still. And then FATCA, a lot of you have probably heard of that before. It's the Foreign Account Tax Compliance Act, which essentially means the IRS and, for example, the Spanish investment authorities talk to each other. The financial institutions talk to them. So everybody kind of knows what's going on with your investment accounts. And some people don't want to work with you as an American because of that, because it's such a compliance burden for them. FBAR, Thomas Snead talked about filing that every year. PFIX, this is an important one, especially on the investment side: passive foreign investment corporations. And a PFIC is essentially a foreign mutual fund, exchange traded fund, sometimes a money market fund, sometimes a pension. When you file your US tax returns, those are taxed quite punitively by the US. In some cases, as high as ordinary income rates versus capital gains. So generally, we always tell people avoid getting into a PFIC. If you want to accomplish diversification in your portfolio, we can certainly do that with a US fund or individual stocks and avoid those punitive penalties. MiFID is Markets in Financial Instruments Directive. And this is really kind of about who regulates your rights as a consumer and who regulates our job as investment advisors. So being registered in Spain, we're regulated by MiFID, and there's different protections available to you here than there are in the US. So it's important to know that we're aware of those as well. And the last one is a bit of a mouthful: packaged retail investment and insurance-based products. Ooh, PRIPS. So that basically says that in the US, we have exchange traded funds that you could invest in. In the EU, there's a piece of legislation, which is this PRIPS, that says these US funds need to provide a fact sheet, which is called a KID statement, to you in the EU, but they don't make that statement typically. So then the custodian won't let you buy these US exchange traded funds. There are some exceptions if you work with a US based registered investment advisor, like our firm in California. But generally speaking, as a retail client, it's very hard to buy these US based exchange traded funds. So it's kind of an overview. And then the last thing is, who do we work with? What types of questions might you have? If you're a US citizen and you live in Spain or you're planning to move to Spain, that's somebody who we can help out, especially with these types of issues with real estate, how it affects your overall portfolio, what your other options are if you want exposure to that market. You might want help managing your investments in a compliant manner in both jurisdictions. You might be confused about where to invest, which custodian will work with you. And again, if you have any questions related to the purchase of real estate, your tax obligations, we work with different partners here who can help you manage all of those and feel hopefully some bit of peace of mind in doing so. And if you've got any questions, I think we're going to have a Q&A here after David speaks. I will stop sharing my screen. I can figure that out.
So thank you very much, Shane. Let's just see. I think David is no, David, you're not muted, so please go ahead. Or hold on, Shane's still sharing your screen.
All right. Let's see. Apologies. Better?
Better. All good. Over to you, David. David, you're not muted, but I can't hear you. Can anyone else hear David?
I can't hear him either.
We could hear him before.
Better without the headphones?
Better without the headphones. We can hear you now.
Is it better now?
Yes.
Brilliant. Sorry about that. Anyway, just as I was saying, really, that first of all, I just wanted to let you know who we are. As I said, we are Banco Sabadell. We are the fourth largest commercial bank in Spain. We were founded in 1881. We mainly started with in a part of Spain, which is Sabadell, near Catalonia, or in Catalonia as such. And we're just doing mainly just business for clothing materials, fabrics, and then we have to help those customers, mainly the companies, to export those materials. And therefore, that's why we became very, our core business is mainly just to look after companies and also international transactions. We are just based in different countries. In the in the USA, we've got a branch in New York, which is a rep office, and also we've got a fully operative branch in Miami. We look after every time of clients. As I said, one of our key or core business is international clients, just for residential, for expats, or for investors. Quite recently, like last week, April 15th, we just opened a new branch, which is called Madrid Welcome Hub, which is just a branch that solely and exclusively is going to be dealing with, or is already dealing with, international clients. We just gather all the clients, more than 12,000 clients from that's really inside of the M30 of Madrid. From 20 branches, we transfer all those clients to this branch, and we're going to try to expand as much as we could and try to look after the clients. This is just roughly the branches that we've got specialized in foreign clients. And as you can see, we've got this first one in Madrid, solely and exclusively dealing with international clients. We can really assist you from this branch to absolutely everything, really. Of course, sooner or later, you're going to need a bank account. Whatever we also recommend, because whenever you're going to buy a property, you're gonna need the branch of and the account. If you could redo that at the very beginning, it's going to be much better to maybe just to use the branch in Spain or the bank in Spain to pay for the down payments or to do absolutely anything. We normally like just to see our customers a face-to-face meeting for the first time. After you can do everything online, but it's pretty important just to have that first meeting and then to sign all the documents, just to have your account up and ready and having no inconveniences later on. If you need a mortgage, of course, we can really do that for you too. And normally for non-residents as such, if you come in a second home in Spain, we could go up to 70% of the loan to value as such. We could go up to 25 years, and our rates are very, very competitive. We could really go normally. If you buy a property and your main income is not in euros, we should only go for variable rates. So it's the euro base plus a margin on top. However, if it's a large sum of money that you're going to pay for the property, we could always try to get a fixed rate for yourself, all right? But we need to get an authorization for that. And as I said, from our Welcome Hub, we're going to be more than happy just to assist any of international clients, mainly coming from the USA. We've got English-speaking staff. All the people in our branches can speak fluent English. Also, we've got French, we've got Arabic, we've got German, and Catalan, of course. And you've got my details. Any questions, anything that you need? As I said, we are something that you need to use if you're going to get a mortgage, or if you don't get a mortgage. We can also offer insurances. Of course, you have to make sure whenever you buy the property that on the date of completion, you should have a house insurance in place. Something happens a few days after and you haven't got insurance, it could be a big problem for yourself. So if with us or with any other company, you should really get that insurance in place. And for the golden visa also, really, I mean, you could also get the golden visa through a different products from banking side, like investments. And really, that's all. Thank you very much, really, for coming here today. And I will be at your service. Anything that you need, absolutely fine for solving any questions or any doubts. All right. Thank you very much.
Thank you very much. Well, thank you to all our panelists. And now, I can't see very many questions in the chat, but would anyone in the audience like to ask a question? I think you probably, so we know you'd like to ask a question, you may have to drop just something in the chat with your name, and then we'll unmute you. You can ask the question, or otherwise you can just simply ask a question in the chat, and we will we can just reply to it that way if you prefer. There was, I think, one question at the beginning from Alan said, would be great if you could cover if there's an agent for buyer and another for the seller, as well as commissions and how they are paid. That may be one for Agnes.
Yeah, sure. That is an excellent question, actually. In general, in Spain, a real estate agent will represent the seller and they will get their commission from the seller. Now, some real estate agents will share this commission with other real estate agents. So if one brings the seller and the other brings the buyer, then they might share that commission. But not all of them do this. There are also some MLSs, multiple listing services, where some real estate agents share their listings. But one thing that you have to bear in mind is that up to 40% of transactions in Spain happen directly between buyer and seller with no agency involved at all. So I believe that's a much higher proportion than what you typically see in the US. And also that many real estate agents do not collaborate or share their commission with any other real estate agents. And that's the typical setup where you have your real estate agent. Now, buyer agents are actually not typical at all in Spain. Because I'm a buyer's agent, we are very uncommon. To have someone who works specifically for the buyer is not typical at all. And as a buyer's agent, my client is only the buyer, and I do not ask for a commission from the seller. I get paid by the buyer. And there are only a handful of agencies that offer this service in Spain, so it's not very common. I hope that answered the question.
That's great. And there's another question for you, Agnes. Is the initial deposit, not arras, refundable if the buyer backs out?
Once you have paid the arras, which is the 10% deposit, then if you back out, then you lose that deposit. Unless there are some provisions in some specific provisions in the contract for specific circumstances. One example that I can think of is in Catalonia, for example, it's mandatory to include a clause that says that if you don't get a mortgage, so if your mortgage application is refused and you have proof of that, then you can actually request your 10% deposit back. But that's kind of an exception. The basic idea is that once you've paid that 10%, if you back out, you lose the money.
Thank you. So here's a question for, it says, Agnes or Alejandra, what is the probability that the financial investment portion of a golden visa, 1 million in bank accounts, 2 million in SB bonds, is kept in place and only the real estate angle is stopped? Is that likely? That may be one for Anna, actually.
Yeah, I think it's more for Anna.
Yeah. So Anna, the question, I think, is it likely that the...
Do you hear me now?
Yes.
Yes, it is quite probable, and it's exactly what I was saying before. No, it's possible that the Golden Visa program is not ended entirely and just transformed into a different type of investment. And it may be possible that the financial investment is there, it's just the real estate part is cancelled. No, so in fact, Spain is interested in attracting investment in public debt or in bank deposits to have more financial assets here. No, so it is possible, but at the moment we don't have any information on how it can be or when it's going to happen and if it's going to be approved at all, no, because for now it's not clear.
Thank you. So yeah, as I understand it, the president made the announcement and then no further information has followed.
Not any bill or any draft is published.
I think this question is maybe back to Agnes. It says, is there a property inspection and an appraisal as part of the purchase process?
Okay, that's also a very good question. We're talking about two different things. A property appraisal, as in an economic valuation of the property, is something that's mandatory if you're buying with a mortgage, because the bank will want to evaluate the property through an official appraiser. That's one thing. A home inspection, if you're referring to a technical inspection, that's again not very typical at all in Spain. Most buyers don't do any kind of technical inspection, and if you do want one done, then you have to bring your own technician.
Okay, and then this may be for Alejandra again. What are the typical annual property tax rates, IBI?
What are the what? The typical what?
Annual property tax rates. Is there an annual property tax?
Well, the annual property tax, I guess he's asking about the IBI, the Impuesto de Bienes Inmuebles. The thing is that one, as I was explaining, it's a municipal tax. So it depends on the city where the property is located. It's calculated on the cadastral value, and each city approves the different rates. So I can't tell you. I mean, in Madrid it's pretty high, and in Barcelona it's pretty high, but probably in Albacete it's not as high, or in small places of Madrid, Alcobendas, and it's pretty high. So it depends where the property is located.
Okay.
And one more thing to add here is that it's calculated that land tax, it's calculated on the cadastral value. So in general, the cadastral value is usually lower than the market value. So in like general terms, the amounts that we may be talking are not, that huge proportionally. Like in general, in Spain, this type of tax in particular is lower than in the US. But when you are buying, when you are making an offer, or when you are considering the particular property, it's a question to ask as part of the due diligence, what would be the annual cost of you having that property?
Thank you. I think we've gone over the hour, but there's just one more question here. Michael asked you all, though I think this may be one for Alejandra again. Do you think the impuesto sobre grandes fortunas will be prolonged beyond 2025?
I think so. I mean, in fact, it was approved for, as you know, 2020 tax years 2022, 2023. So it's, I mean, it's going to be applicable for 2024. And probably for 2025, I don't know if we will have a change of government, but I really think that even if we do have it, I think this one came to stay. But we'll see. The only chance is a change of government. And even though I'm not very sure that they are not going to apply it, so we'll see.
And there is just one more question here for Thomas. Should selling US stocks be timed in a similar fashion as selling property, such as before July? If I guess that's referring to moving from the US to Spain.
Yeah, and if Alejandra looks like she agrees, yeah, I would say yes. Yes.
Yeah. Here, the thing is that if you are a non-Spanish tax resident, you are only taxed for Spanish source income. So any income that you receive from outside of Spain, property, bonds, or whatever capital gains, interest, dividends, whatever, which is not Spanish source income, is not taxed.
Thank you. And thank all the panelists, and thank you to the audience for joining us this evening. We will email you tomorrow with all the panelists' contact details, so you can get in touch if you'd like some professional advice relating to your situation. We will put the webinar on YouTube in the coming days. And if you'd like a copy of the slides for a particular presentation, again, reach out to the panelists when we email you the contact details tomorrow. But yes, thank you very much to everyone, and I hope you all have a good evening.